Well, here we go. Boston Coin. Jeremy started his career in financial planning in 1992. He went on to create half a dozen financial planning businesses. Jeremy has created the world's first cryptocurrency mutual fund in 2016. Author of best-selling books on business and investing, Jeremy has spoken on stages for over 30 years on 5 continents. He loves his children and his puppies, and Jeremy loves to simplify investing for you. So welcome, Jeremy. Looking forward to this. Thank you.
Thank you, Susan. It's just the raw slide.
We've just got money talk, but it's the
we
proper
have money
presentation.
talks that you are you listening?
Fantastic technology. All right.
Done.
So anybody who was at my talk 20 years ago is going to be having a little sense of deja vu, but that's the whole point, is that common things occur and reoccur, and history repeats. The older you get, the more you will realize that. So
Means of exchange.
It's means of exchange. Yep. And what does that mean to you, Rhonda, in specific Rhonda terms?
That means that I can trade something I've got for something I want.
Nice. You can get things that you want. Okay. Anyone else?
Less stress.
More money you got, the less stress sometimes. Yep.
Sometimes.
What was that one?
More influence.
More influence. Yes. Yeah. You can do more things. You can affect more things. And for some people, that might be influencing your life and getting more shiny dog toys. And for some people, it's influencing other lives as well. So giving back. Excellent. So we'll try and move quickly because I think we started a little late this morning. So popular investments, property has been around, well, it's been around since caveman times, but we haven't tracked the prices since the 1400s. Stocks and shares been around since the 1600s, and crypto's only been around for the last 15 years. But there's a trick. So I hope you've got your phones. Everybody got their phone on their desk?
Yes.
All right, because we're going to need some phones, we're going to need some cameras, we're going to need some calculators. Awesome. Now, the big question is when to buy different things, because there's a great time to buy property, there's a terrible time to buy shares, and there's different times to buy crypto. Let's have a look. This is tracking prices, average prices over the last 50 years, just in the US. So property has averaged 4 to 7% per year. Stocks have averaged 10 to 15%, about twice as good, but obviously more volatility in the stock market than the property market. And crypto's average between 30 and 150% per year with more volatility. Anybody know why the asterisk is there?
No.
A warning.
A warning. Okay. It's actually because of the asterisk is there because the heading returns over the last 50 years. And how long has crypto been around?
15.
Right. All right. So let's have a look. Grab your calculator, because the NASDAQ, the stock market, opened in 1980 in the US. It's been running for the last 45 years. It's closed on Saturdays and Sundays. It's closed on Thanksgiving and Christmas and Easter and a few other days. So there's 250 days of NASDAQ trading, and they only work for about 6 or 7 hours a day. So someone's going to be able to tell me how many hours the NASDAQ has been running. 45 years, 250 days, 7 hours. Fastest calculator wins a prize.
Wow, when you look at it like that.
Because this is how many working hours?
78,750.
78,750. Thank you, Rhonda. Okay, that's how many working hours have been in the last 45 years. Now, crypto has been running only for 15 years, but doesn't have any downtime. The Bitcoin network has never gone down in 15 years. It operates 365 days a year, 24 hours a day. While you're sleeping tonight, there'll be someone in China, India, Pakistan, Israel buying crypto. So fastest calculator wins a prize. 15 years by 365 days by 24 hours.
131,400.
131,400. Thank you, Anne. So crypto has been up for 131,400 hours. Rhonda, how long has the NASDAQ been up?
78,750.
Interesting, isn't it? So even though crypto's only been around for 15 years, it's been operating longer than the NASDAQ has in 45 years. So we can draw some lines and some extrapolations. It's very exciting. Okay. Anyone heard of the Medicis? They started the bank in Rome, 1397.
Yes.
The Dutch started writing down how many guilders their house prices cost in 1400s. Anyone who's seen Pirates of the Caribbean will know the Dutch East India Company was the first stock. They took investments from people and then went around sailing and trading spices and things. And the first crypto was, of course, 2009 after the global financial crisis. But as we've just found out, it's been trading a lot longer than the NASDAQ. So we can draw some charts and some fun stuff. Now, this little clock here, you want to take a snapshot of that because that's going to make you millions. And that is in my book as well from back in 2006 and in the new one. So this is the tool I've been using. This tool is actually 300 years old. And basically it looks at, everything that's happened in the last 300 years and the echoes over time. So you can see what's going to happen because of what's happened before. So let's have a look, say at about 8 o'clock where the little hand is pointing, rising shares, right? Famously, we had a great stock market year after the Wall Street movie came out in 1985. And then the next year, 1986, everyone piled into the stock market. It was a great 1987. And then the stock prices crashed, right? What happened when the stock prices crashed? We go up from 8, 9, 10, 11 o'clock. The government or the Federal Reserve, whoever it is, the reserve banks, start printing cash to try and ease us out of what might be a recession or a depression coming up. Then people start buying real estate because they don't trust the stock market anymore, but there's cash available and there's lower interest rates. And then if property prices get too high too quickly, the banks put up the interest rates, which means that the property market cools off. And the cycle just goes around. All the government or all the reserve banks can do is put up the interest rates, put down the interest rates. They can print cash, they can withdraw cash. That's all they can do. And they do that in response to these market conditions. And it's always the same. The clock always goes around the same way. The same things always occur. Sometimes the cycle takes 7 years, sometimes the cycle takes 12 years. But again, over the last 300 years, that's how it's always played out. So looking at the little puppy, anyone who's learned to play chess, you can learn the basic moves within an hour or two, okay? But you're not a grandmaster unless you put 10,000 hours into it. So you can start to play a little bit with this, and that's okay. You can become as expert as you like, and you can learn to double your money literally twice as fast as what anybody else does, even with just a basic understanding. So again, grab your phone out, take a snapshot of that. The book that I wrote in 2006, the one that got me on the stage in SWAP back 20 years ago, was a book predicting the global financial crisis that was coming 2 years down the track because of the indicators, because of what was going on in the market, okay? Anybody who's seen the movie The Big Short knows that Michael Burry knew what was going to happen. He didn't tell anyone, though. He just made a bet against the banks and made $1 billion. I tried to warn everybody, and the people who read my book and took action, very happy. The ones who didn't, not so happy. And again, same tool, September 2019. If you can go onto our website later, you can see where we actually had the newsletter sent out in September 2019, warning people there was going to be another crash 6 months before the pandemic actually occurred. So who would like to know when the next crash is coming? Just Anne. All right. So there's one or two of you, maybe Lance is old enough to remember the 80s. So the stock market went very high, then crashed. People moved into property. The I'm using the banks and governments interchangeably. Apologies for that. But it's the Reserve Banks who put up the interest rates. So some people will remember when the interest rates went from 6%, 7%, 8% up to 18% because the property prices were getting too high and they needed to slow down the property market. And then what happened after the property market slowed down? People moved into stocks. Stocks went up for a few years. We had peak stock prices. Then we had a trigger event, which was the 9/11 plane crash. That helped to bring the market down, but the market was always going to crash. Okay. And then our next cycle, if you look down the side, you can see like every 7 to 12 years. Next cycle, we had lower rates because after 9/11, and there was a whole bunch of political stuff going on, as well as economic stuff. And then the stock market started to get overheated. And this is when I published the book and said, hey, stock market's getting overheated. It's going to crash. And we had the global financial crisis. There was a trigger event, Bear Stearns, and some of these guys lost some money. And it's just a domino effect. Once one goes down, it starts to bring down the whole house of cards. After 2008, we had a recovery, built up, lower interest rates. Things started to get good. And then we had a black swan event. After the black swan event, well, after the pandemic, you'll remember the interest rates went down very, very low, which triggered a lot of growth, a lot of borrowing, a lot of spending. And then we're in the recovery phase right now, 2024, 2025. But I'm looking forward and saying, okay, 2027, 2028, there is going to be a crash, right? I'll revise my estimates as we get closer and closer to it. So watch this space. But there's always going to be a trigger event. You know, back in the 80s, it was someone tried to assassinate Ronald Reagan. 2001, obviously the plane crash was something happens that wakes people up and makes them go, oh, stock prices are way too high. They've been going up for a few years. On this little chart, you can see in the 80s, and again, Wall Street movie came out in 1985. The stock market went up 65% in that year, right? Massive. Long-term growth, remember, was like about 15%. So a 60% jump is unheard of and an indication that maybe things are getting too excited. Then the following year, 1986, it jumped up another 40%. And you go, that's way too high. It shouldn't be that high. But because it was going up, more people were piling in and getting excited about it. It was just going up because it was going up. And then something happens and people go, hang on, that's too high. I'm not paying that, $30 for a share that used to be $10. And they start to sell. And then someone else sells and then someone else sells and the market starts to fall and then people panic. So we have these little crashes. It's harder to see. So I've circled in red the property prices because you can't really see big jumps in property prices. But 1992 is where the interest rates hit a peak. And it's hard to see between 1992 and 2008 when property prices actually went down very slowly. But property prices were very, very quiet when the interest rates were high. No one wanted to borrow new money when interest rates were 13, 15%. And obviously over time, things stabilise in the economy. The banks start to reduce the interest rates. And again, it just follows the clock, just goes around and goes around. So we've got a little drop there, another little drop after the property prices started to pick up too much too soon. They raised the interest rates. A couple of years later, they lower them again. And we get this spike and the system just goes on and goes on. But if you look at the top line, obviously you can make a lot more money in stocks in a shorter period, but then there's the crash. So by watching the clock, you know when the crash is going to happen. Not exactly, but you might know within 6 months, within 12 months, that there's going to be a crash. And that's a time when you start scaling back, you start consolidating. You can actually take a loan. If you've got good stocks, you can take a loan against your stocks and you can get a loan to buy property before everybody else jumps into the property market. You can actually be early. And then I think between 92 and 99, property prices were basically a little bit backwards or basically the same. I bought a property in 1999. Nothing happened for the next 12 months. I told a lot of my clients to buy property in 1999. Nothing much happened. because I was calling there was going to be a trigger event, there was going to be a crash. I didn't know the Twin Towers was going to come down, but once they did and the stocks crashed, my property went up 260% within 4 years
Mm.
after sitting flat for 7 years. So for people who say, oh, I love property, great, but you might have to sit flat for 6 or 7 years before you get to the doubling. And some people love stocks, but then you're going to have to deal with these crashes. So it's always good to know how both of them work and how they work in opposite cycles. So you can move from one to the other, or you can have both. And then you can literally make twice as much money, twice as fast as the next person. Are we going too fast? Is this good stuff?
No.
No,
That's good.
Excellent.
great.
Excellent. All right. Anybody who missed out on the book, grab that now. 1, 2, 3, gone. Okay. So just me, got into stocks, my first financial planning business in 1992, the peak of the interest rates. Got into crypto. I was first told about crypto in 2012, but didn't get in until 2015. And then decided to make crypto simple for everybody else, like they do with the stock mutual funds. For people who don't want to choose their own stocks and say, I want some BHP or I want some Woolworths or whatever, you can just go in and say, I want to buy the index. I want to buy the top 200. I want to buy the Chinese stock market, the American stock market, the Australian stock market, and someone will actually run that fund for you. So we do that. But for crypto, you can go onto the website. You can see how we've actually made significant amounts of money. First 4 years, I think we averaged 366%.
Wow.
We've recently, and this is the fun part, because we just did month end a couple of days ago. So we invest in the cryptocurrencies like the Bitcoins and your XRP, Ripples and Ethereums and things like that. But we also invest in the infrastructure, because if the crypto market is going down, the people who make money are the exchanges. People are going onto the exchanges to sell their crypto, and the exchanges is making money whether the market's going up or down. Also, the crypto runs on rails, like the internet runs on rails. So we invested into those companies, and this is the fun part, just for this month. It wasn't the cryptocurrencies that gave us the best returns. We actually had the stocks and shares, and plain old stocks and shares, in one of the exchanges that went up 600%. And we had stocks and shares in the fiber optic company, the telco, that actually went up 300%. So that was interesting for me, because most of the time the crypto market significantly outperforms the stock market. But just for this, this period up to the end of this last month, the stocks had actually outperformed. The crypto stocks had outperformed. Who would like to get 300% returns?
Yeah, it would be good.
Yes, please.
It helps if you know what you're doing and being in the right place at the right time. So this is that same black and white clock that we were looking at before, but just updated to include the cryptocurrency. And you can see where we have the rising interest rates, which leads into a recession, and then the recovery. The banks start giving us more cash and lowering the interest rates, and then we get the expansion. So you can start to look at this. And I've even jumped onto ChatGPT and uploaded the picture and said, okay, this is a 300-year-old tool predicting the market cycles. Check that against your historical records. And GPT goes, yep, that tracks. Every 7 to 12 years, we have this spin around the cycle. And then I said, okay, ChatGPT, judging by the news headlines over the last 6 months, where do you think we are in the cycle? And it goes and looks, okay, the interest rates are going down in this country, and this is happening here, and there's financial stimulus happening, blah, 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 blah. So it tells me where we are on the clock. I don't need to actually do work that I used to do, reading all the newspapers, because who's got time for reading newspapers, right? Just knowing what's going to happen, because it's always happened before. And as I say, it's not perfect. It's not going to tell you there's going to be a stock market crash on the 13th of June, 2028. But if you're 6 months early, it's better than being 5 minutes late. And as I say, like I bought my property, it took 18 months for it to start to move. And then within 4 years, it had more than 200%. And buying stocks when I did, obviously, I've made massive, massive gains in stocks by buying at the right time. So final tips, diversification is always your best friend. And if you don't want to use the clock, that's fine, but use all of the asset classes. And that way, if you've got stocks and shares and they drop, but you're also holding property, the property is going to go up. And if you've got property and the property slows down, you've got stocks and shares, those are going to pick up. So always diversify. There's different types of property: commercial property, residential, industrial. You could also invest in agricultural property. Obviously different locations, because if you go, oh, I'm diversified, I own 3 properties and they're all in the one street, and then the terrorists move in across the road, all of your properties have gone down. So different types of property, different locations. Otherwise, you can buy what's called a REIT, real estate investment trust, and they diversify the portfolio for you. Okay. Again, with stocks, you don't want to be holding airline stocks on the day the plane crash happens. So different stocks in different industries, different locations. So if China's making all of the microchips and America's not, but America's making all of the electric cars and someone else is not, different locations, different stocks, or you can buy stock index funds, exchange traded funds, where someone else actually looks after it for you and does that stuff. And they usually charge you about 2% per year, which is okay because you should be making significantly more than that. And diversification in crypto. People understand there's different stock market businesses. People drive past different properties, but there's also diversification in crypto. It's not just all about Bitcoin. There's what they call DeFi, decentralized finance. There's DePIN, which is decentralized physical infrastructure. There's real world assets where you can actually buy paintings and pianos and God knows what, solar farms on the blockchain. Utility coins, which are like your exchange coins, Binance Coin or Coinbase, these sort of things. Again, the telcos, the fiber optics, the crypto exchanges, they need this to run, to operate. Okay, so you can diversify into those. And of course, if you don't want to be doing all the homework on that, if you don't have time, then you can get into an index fund. Galaxy invests into the parent companies that make the tokens, and Boston Trading Company invests in the tokens themselves. So you can track those guys over the last few years. Boston Trading's been in business for 10 years. Galaxy's been in business, I think, for maybe 5 or 6. So there you go. Top 3 tips. Learn the clockwork investing, diversify your diversification, and talk to an expert. We all hear those stories about, oh, you know, so-and-so's brother-in-law got lucky and made 12 million% on Trump coin or Dogecoin or Melania coin. Sure, they got lucky one time. But you want to find someone who's been doing it consistently for 10 years, 20 years, 30 years. Questions, comments? Get off the stage.
How do you
Well,
get
Jeremy,
started?
Sorry, Ann?
yes, I mean, what specifically, like for somebody who has not been investing in crypto at all, what is it that you offer, and how do you get started on it?
Well, it's basically it's a mutual fund. So you'd be used to like the 401ks and the Roth IRAs, where you basically got the S&P 500. You own the top 500 stocks on the stock exchange. You don't need to think about it. It's already diversified into mining and banking and whatever else. So that's what we do, but it's crypto inside of the box instead of stocks. You can go onto the website, you can have a look at the portfolio, and it'll show you like 40, 50 different things that we're in. We actually update our portfolio live. So you can phone your guys who do your stock market fund or your Roth IRA and say, oh, what are you holding at the moment? They won't tell you, right? But we've actually got ours live. So you can see, at the moment it's like 43% Bitcoin and it's 6% cash and it's something percent in something else. And then you come back and check in 2 days and the ratio has changed because we're buying and selling all the time. And we like to keep you informed. So it's full transparency at all times.
And is there a minimum amount, or how do you actually invest?
Yeah, we can talk about that because there's different amounts depending on whether you're investing in the individual name or whether you're investing in behalf of like a family trust or a Roth IRA or a self-managed super fund or whatever. So
We'll talk
You-
about it.
Yeah. Have a look at the pretty bubbles. Have a look at the portfolio. And then you can also have a look at the charts. Because as I say, we do a monthly update every month for the last 10 years. The most recent one will be coming up in a couple of days, but you can go back and look at the end of June and I'll show you a chart. And it's basically a chart of the stock market over the last 10 years versus the crypto fund. And then there's another one of like the high risk fund versus the stock market over 5 years. You can have a look at those charts and see where it's significant outperformance. Again, but there is choppy bits. There's bits where, you know, in 2022, the crypto market dropped by 50%. And if you had all of your money in crypto, that would be a very upsetting thing. But if you were diversified or you knew what was coming ahead of time, then you'd be okay.
So is this a good time to get into crypto on that clock now, or is it not such a good,
Yeah, it's a good time now for both stocks and crypto. So the next, again, we're predicting the future. So again, the next probably 2 to 3 years, potentially. But updating obviously as things happen around the world. I mean, if war breaks out tomorrow, then we revise the estimates. And if something else happens, if there's a black swan event, obviously that sort of happens. But if you look at even looking at the stock chart over the last 12 months, and you say, oh, Russia's gone to war with Ukraine, it's barely a blip. The war in the Middle East, it's barely a blip. Like nothing much has happened because the market isn't overvalued. So if the market's massively overvalued, some of these little trigger events would have pushed it right over the edge, but we're not there yet. It's a good time to get in right now.
And does your website differentiate the ideas between a personal account or a family trust or a, you know, whatever?
Yeah. So it's got it in the frequently asked questions. It says, how much do I need to put in if I'm an individual? How much do I need to put in? Can I invest in the high risk fund as well as the low risk fund? Can I split between that sort of stuff? We've got funds that are set up for people of Jewish extraction, people who are Muslim, people who are Buddhists or Hindus, because they can invest in different things depending on their belief systems, right? So there's prohibitions and ethical concerns in people's different belief systems. And we want to be conscious of that and say, investing's for everyone, right? So if you're in a particular region that doesn't allow you to invest in X, Y, Z, we'll create a fund to help you to get started.
And you're based in New Zealand? I mean, how does this work if I'm in the United States and tax time or whatever? I mean, what happens?
Tax? What's tax? The founders of the company, we are both in Australia, but we started the company in the US. It's called Boston Trading after the dog, not after Boston. So we started the Delaware Corporation, which is tax exempt. We also started the Wyoming Corporation, which is tax exempt. So when we take money from the investors, you know, we do our best to increase it massively. And then when you want to pull your funds out, it's up to you to report your tax implications in your own area. Because some investors are in Dubai, they pay 5%. US, you might pay 20%, 30%. I don't know what it is. Mm-hmm. None of my business. We just tell you, okay, this is what you gave us. This is what you got back. If you want to go and tell the IRS, that's up to you. If you don't want to tell them, whatever.
Do you have to report to the tax authorities?
We put in a tax return every year.
No. Do you have to report what your investors do?
Oh, hell no. No, I'm not your mum, Rhonda. I'm not going to snitch. Snitches get stitches.
And was your website bostontrading.what? I didn't catch it.
.co. We're saving up for the M.
Yeah, that's a UK designation, isn't it?
UK is .co.uk.
Okay.
Like Australia's .com.au.
Yeah.
So yeah, it's just a generic one. So, but if you use
and customer service, where does that get responded to? How does that, you know, if we have questions or things like that?
We've got a free call number in the US. We've also got a free call number in Australia. And obviously emails and Zoom chats and that sort of stuff as well. So you're talking to real people, not robots.
Okay.
Unless you want to talk to the robot, we do have a little chat bot.
Oh, no, thank you.
But it's mostly people asking the questions that are already on the frequently asked questions. So.
And is there like a dividend reinvestment type of thing or something? I mean, so if you can go and look and see, okay, that this month it's gone up this much or it's gone down or whatever.
Yeah.
And then do you pay dividends or do you, how does that all work?
Yeah, generally not. This is the interesting thing, usually asked by the Australian people, not the Americans, because not 95% of Australian stocks and shares pay an income. Like you get a dividend payment from Telstra or from Domino's or from Woolworths or something like that. Whereas in the US, it's only 5% actually pay a dividend. So we've gone with the US system where it basically just compounds, it just grows and grows and grows. And if you need some money out to buy yourself a new Lamborghini, you can just withdraw it. And then, if you report to the IRS, do that. If you don't, we won't tell.
How interesting.
How do you get away with not answering their demands about who's doing what? The tax department usually keeps track on everything.
Yeah, there's lots of tricky things that you can do at the
It's
moment.
another conversation
Yeah,
offline.
it's another conversation because the crypto regulation, we've been waiting 10 years for the regulations to come in because I've always been under the regulations for the stock market. But there has up until just very recently when the president in the US signed the Genius Act, I think Australia is still a little bit behind, and in Europe they've got MiCA, but there's not very much legislation at the moment. So you can kind of get away with a bunch of stuff if you know what you're doing. There might be a little window of opportunity before every country has the right regulations, but there's been some amazing things happening where young kids have put in like $10,000. They've woken up one day and they've got 5 million. They can pull it out and nobody even knows. So, I'm not saying you should do that. Pay your taxes if you want to, but if you don't want to, there's ways.
It's an offline discussion.
I don't like the way they spend the money.
Yeah, well, that's a whole nother 3-hour conversation.
Yeah.
So, all good. So everybody.
So what is your organization? How many people are involved? Where do you make your trading decisions? And what kind of structure do you have for all that?
You again have a look on the website. You can see pretty pictures of us. That's probably about half of the team are on there. Some of the team prefer to remain anonymous because they've got interesting histories where they've worked for shadow governments and things like that. And some people are just shy. So, but yeah, there's a bunch of people there. We make lots of decisions. There's some presentations and updates on the monthly updates where we actually say how we actually chose. How did we know that this particular crypto was going to go up 13,000%? Well, we didn't, but we looked at it, we did the research, and we thought this one could probably double. And then when it doubled, we sold off a little bit of it to take some profits, rebalance, because that's sensible. And then when it goes up again, then we sell off a little bit more, it goes up again. It's like having your apple tree. You don't pull all the apples off, you leave some to actually regrow. So there's a whole strategy behind how we do what we do, and it's based on many years in the stock market. So if you buy a stock for $1 and it goes up to $10, you go, great, I've made money, but you don't actually get to keep that money until you sell off a bit of it. So that's where we'd probably say, okay, if you buy something for $1, it goes to $10, we sell off 5, put our money back on the table, spread it into something safer, and we let the other 5 go and do what it does. And if it crashes and goes to 0, it doesn't matter because we've already got, we've made 5 times our money. But if it keeps going up, then you can take another apple as it keeps going up, rebalance. And then, again, this is strategies from the stock market that we've brought into crypto markets.
Transferred. And it's interesting because we knew some people when Louis was trading in the past and he was trading, CFDs and all that kind of stuff. We knew people that actually borrowed money to trade and they lost it.
Oh.
So the strategy, and a lot of people, so the strategy in trading or investing money in anything is you don't take your rent money or your mortgage money and put it into anything.
Yeah.
You pay your bills. It's business as usual, and we've learnt the lessons the hard way too because we had money when the towers went down 20 years ago. We lost quite a lot of money. For us and a few other people that we had all invested in one place, And the moral of the story is we invested in one place, all of it.
Yeah.
So,
And the
you
other
know,
thing too is most people buy
like,
when it's high
you've
and
got to be
sell when it's
careful.
low, which is a recipe for going broke.
Yeah, yeah. I mean, as you say, Ron, like some people looked at the stock market in 1985 and went, "Oh, it's gone up 50%. I better jump in." And the next year, it's gone up 60%. Oh, I better jump in. It's like, no, the long running average is 15%. So it's gone up massively. Math will tell you it's going to come back down just so the average stays true. And same with property. If property's just doubled, possibly don't go and buy another property because it's not going to double again and then again. It's like if the roulette wheel comes up red 3 times in a row, the next one's probably not going to be red. Yeah. So that's why we diversify and you keep an eye on the economic clock. And as I say, you can go back, you know, most of you weren't born in the 1980s, but you can go back through the 70s and the 60s and the 1950s. I've got a stock chart of 200 years, so you can look at like what was going on with the stock market when the Boer War was being fought against the Zulus in 1899, and you can see what effect it had on the property prices and the stock market prices. So over 200 years, this pattern holds out. It's probably going to hold out for the next few years.
Yeah, it's a cycle, isn't it?
Well, I got out of the stock market in 2008 before it went through the floor, and I was trading cocoa in the 2000s, and we had our biggest trade ever at 9/11.
Oh wow!
We had cocoa futures, and I forget whether we were buying or selling. I forget how it was, but we put it on about 2 days before, left it on over the weekend. Then the crash came. The market was shut for a couple of days, and when it came on, cocoa was about 3 or 4 times what it was.
Well, after a global tragedy, you want to sit down with a cup of cocoa, I think.
Yeah. And I think cocoa and coffee has gone up anyway. So as has gold. But anyway.
Yeah.
Jeremy, I'm curious as to, I'm looking on your website now too. How did you decide, and Jennifer Robertson, it looks like, is your co-founder.
Yeah.
How did you decide to do this, and how did you choose each other?
You had like the romantical story or the logical story, or again, my background is many years in the stock market. Like I got in at first by buying an index fund because I didn't know anything when I was 19, and I would notice what was happening because they'd send me little reports, right? And because I didn't know anything about it, I started to read the reports, and I'd notice they're selling the Coca-Cola shares in summertime. Like that's when everybody's drinking Coca-Cola. And then they'd buy them in the wintertime. And like, well, that's when no one's drinking Coca-Cola. And it seemed funny to me. So I started to look into, they're buying things when people don't want them. They're selling things when everybody wants them. And I could see what was going on because different things, obviously Coca-Cola was a seasonal thing, but there was other things that were seasonal because of Christmas. People buy more toys than they do throughout the year and things like that. So I started to look at how the thing worked, basically pulling apart the mechanics. And then I started buying my own stocks and basically doing what the fund managers did. I made a lot of mistakes. I learned a lot of things. I asked a lot of questions of people who are older than me. I'd be the one, you know, the 19-year-old kid following the 50-year-olds around the office and writing down everything they said. So that was always the stock market for me, was helping other people to learn it, helping to make it simple for them, for people who had no time. And then when I got into crypto, I was like, this is like a little tiny stock market. You know, because Bitcoin is like digital gold, Ethereum is kind of like silver, and this one's more like oil, and this one's more like this, and this is how they react to different market conditions. And when I started teaching my friends how to do this and how to buy the cryptos at the right time and sell them at the right time, most of my friends who are accountants, lawyers, you know, stock traders, they're like, I don't have time for that. Can somebody else do it for me? And there was no one who had a crypto mutual fund. So again, my background is in trading, but Jennifer's background is 30 years in corporate law, corporate governance, you know, being a lawyer to the businesses. So I talked to her about how can we make a structure like a mutual fund that had never existed before for a product that didn't exist, you know, a couple of years ago. And so we got to meet a lot of interesting people, lawyers and tax specialists and accountants and things like this to actually make this little box. And as I say, well, with first one in the world, there's been a couple that came on and started up after we did. And sadly, most of them actually went bankrupt because they weren't stock pickers. They got into crypto because crypto was trendy, but they didn't have the common sense, I guess, to do the research. They invested into dodgy projects. They borrowed too much money. They chased after shiny objects rather than diversifying. And then within 2 or 3 years, some of them had lost like $90 billion and gone. Where we're still here. So we're just old school, you know, been in the markets for many, many years, and we've learned the lessons of the stock market, and that's what we're applying to crypto, and it's still working.
But we didn't hear the romantic side of things.
Oh, I think Jennifer's a legal genius. She thinks I'm an investment genius. You know, it's a mutual admiration society.
I think they fell in love over the doggies.
We love our puppies. We do.
Yeah, yeah, definitely. Thank you, Jeremy.
It's very interesting.
Alex, I think we need to say thank you to Jeremy. Would you like to do the honours?
I love to do that. Jeremy, it's always interesting to look at the dimensions of something quite different or something we've not been brought up with. Things have changed so much. I keep telling my grandkids that I grew up in an age where my brother and I would take the milk to the dairy factory on a horse and cart. And things have just changed so much there. And things are changing at such a rapid pace. And it's fascinating, what's available to us now, what might be available after crypto, because there'll be something after crypto that we don't even think about. It's probably a little bit of it around, but we've got no idea what's going to develop, and there's just so many ideas. The scary thing is something like AI and what that might do to us. On our recent travels, I got stuffed up twice with AI when AI decided it would change what I'd put on my visa application forms after I'd done them, only to find that they became invalid. One place rescued, the other didn't. But so, and just seeing how it fits together. It's also interesting that everything changes, but nothing changes.
Yes.
And if you go back and read some of the Roman philosophers, the advice they were giving to the young folk are no different than what we give to our young folk.
Yeah.
And there's an element of that all the way through all these new developments, but sometimes it takes a while to mature. I think the biggest problem with that I've seen with crypto, and you didn't touch on it, is that there have also been so many scams in that industry, with people offering all kinds of things and then setting up offices in the Middle East or Dubai, and then everybody disappearing with the only money take is what they've got in their pocket, not what was in yours originally.
That was my other presentation, how to avoid the scams.
Well,
did that 12 months ago, so I'll send you a copy of that one.
Yeah.
Would you?
That'd be lovely.
Yeah, that would be lovely.
Because Lance is really interested in that.
I mean, there's two ways you can learn how to avoid the scams and learn how to buy the ones before they go up, or you can trust someone else to do it for you. So obviously, you know, I've got a bias because this is my bread and butter, but we charge 2% a year. For the first 4 years, we made 366%. We've made more than 10,000% 7 times in the last 10 years. So, you know, we bought XRP when it was floundering. We're up 500% on that. As I said before, we're up 633% because we bought Coinbase shares when Coinbase was being sued by the SEC, and the share price dropped by about 90%. And we went, yep, that's a time to buy that one because we think they're going to come out of it. We bought Solana for 15 cents, and what is it now, Lance? Like $180. So, but you buy it at 15 cents, we go, yep, we're going to buy some of this. When it goes up to 30, 40, 50 cents, we sell a little bit and then we keep the rest and see what happens. And then it goes up 1,000% and we sell some more and we keep the rest and see what happens. So we've done that numerous times by knowing how to do the research, the same way that you would research a stock and find out who's the founder of the company. If they're anonymous, forget about it. Who's the founder of the company? Look them up on LinkedIn. Make sure it's the right person. Make sure the photos match. There's a whole bunch of different things that you can do to avoid the scams, or you can just hand it over to someone who's doing it all day, every day, and go, yeah, they probably earn their 2%.
Thank you.
That'll be me.
That's a big challenge for most of us, is that you got to be in the know to know, really.
Yeah.
Get your head around.
I mean, there's financial scams in the stock market. There's scams in horse breeding. There's so many scams. I've seen thousands of them. Yeah, and in banks and everything. There's property scams. Sometimes people lose $400,000 in a property scam, as one of my clients did. So yeah, there's scams all over. But if you talk to someone and talk to an expert, don't just talk to their advisors. Talk to a trusted friend and talk to an accountant, talk to a financial planner who knows what to look for and knows what to check.
Absolutely.
But if you talk to an accountant, make sure he's charging you a fee, because otherwise it couldn't be worth anything.
Yeah.
Hi, Lance.
Yeah.
Thank you very, very much, Jeremy. Very enlightening and very entertaining. Thank you so much.
Cheers.
Thanks very much, Jamie.
Fantastic.
Yeah, and well presented.
And if anyone wants to contact Jeremy, he's got a calendar somewhere. You can add your name to his calendar and get your 15 minutes worth of free update information, whatever. Just make sure he's, I think it's on your website, isn't it, Jeremy? They can go into your diary and kind of ask for a 15-minute whatever. I've had a few of those and going to have a meeting with Jeremy really soon about my very small amount of money, but regardless, whatever it is. Thank you all. I'm sorry for the beginning being a little bit bumpy, but we are resilient and we go on as swappers, and it's all appreciated, and we're in the growing, learning tech phase. And Rhonda, do you want to do the I'm alive and I'm well? You're in charge.